So very good morning to all our RANsquawk listeners. Hope you all had a fantastic weekend. A quick look forward, and ultimately there is only really one key major event for the markets this week, and that is the ECB interest rate and press conference we'll see on Thursday. Now the markets have already pretty much priced in the fact that rates are to be cut in the euro area and that the deposit rate will go into negative for the first time in history of the European Central Bank. However, the question marks remain on how far the ECB will go in loosening monetary policy in the particular month of June 5th. Now, a lot of other things aside from cutting rates have been mentioned, most notably recently LTROs, and furthermore going in towards doing that liquidity exercise in order to get banks to lend more by borrowing directly from the European Central Bank continues to be at the forefront of most analysts' expectations. German press Der Spiegel this morning reported the potential for a 4-year fixed term for the latest LTRO announcements, which would be a slight increase from their prior programs. Elsewhere, targeting of asset-backed securities and also non-sterilisation of purchases have been seen as other more likely forms of easing that could come aside from cutting interest rates. On an outside perspective, there has been some talk about the potential for QE from the ECB as they look to counter falling inflation. However, that is seen as an outside possibility, and if it did happen, it would be an extremely dovish mood from the European Central Bank and would likely see a large downside reaction in euro currency. At the moment, though, in terms of where we trade in euro dollar, still pretty close to that 136 handle. We have already seen this morning the various German state CPIs, which once again confirmed in the national German reading showed somewhat concerns over deflationary pressures as the month-to-month readings were contractions, and in terms of the year-on-year prints down sharply in this latest month from previous. So that's to come on Thursday. All eyes and ears will be on any ECB rhetoric that we see heading in towards that Thursday decision. We've already seen the likes of ECB sources hit the wires this morning, suggesting that an interest rate cut is pretty much a done deal. From here, it's a case of what liquidity steps the ECB take to accompany that decrease in rates. Otherwise, a couple of look at the other things to be aware of. We do have the Bank of England and Reserve Bank of Australia interest rate decisions, but both of which are not expected to yield any surprises, with rates to remain on hold at 0.5% in the case of the UK and 2.5% for Australia, which is due overnight. And then looking forward to Friday, we'll see the release of non-farm payrolls. The headline reading is currently expected to come in at 215,000, which would be now a couple of consecutive months when we've been above that psychological 200,000 in the headline reading at NFP. But at this point, not expected to make too much difference in terms of FOMC timings for the general market pricing in and Fed communication that rates will eventually start to rise around mid of 2015, well after the end of tapering to happen at the end of this year. That pretty much though summarises the main things to look out for this week, so be mindful of any ECB commentary from individual board members heading towards Thursday. But that's pretty much it from me, so I wish you a great trading day and a fantastic week.